And welcome, ladies and gentlemen, to the final week of our debates about capitalism. And in this week, we're going to take a step back and look at the big picture, and that is the market, right? And in many debates, you have a debate about the free market, and that's going to be about the big picture and the overall market, right? Which is a culmination of all the different things we've been talking about. How capitalism impacts the individual, how that impacts the company, how that impacts the nation, and now when all of those things come together, we have the market. Okay, so very briefly, let's look at what it means, what is the theory with the market. So when we talk about a market here, we're talking about any kind of collection or industry. The goal of any economy is to create some kind of market, right? And at a very basic level, in a market, you have buyers and you have sellers, right? Those two groups combined together form a market. The overall market will include many different industries. So you have the auto industry in the market, you have a health industry in the market. For example, you have the construction industry, right? So all of these different industries, and all of these industries overlap, right? The construction industry needs, trucks and machinery and cars, and all of those things come from the auto industry. Workers from the construction industry go to the health industry, as do workers from the auto industry, and so on and so forth, right? So all the different industries tie together and form a big market, and within the market, people are either buyers or they are sellers, right? And they interact with each other. So free market theory is, if you let the market be free, meaning that you remove controls, you don't tell the market what to do, then the market will balance and the market will adjust. Resources will go to where those resources are most required. So if there's a huge demand for cars or overall, and the auto industry is doing really, really well, then all workers will come and move into the auto industry. Investment will move into the auto industry, capital will move into the auto industry, and it'll become stronger. Right? And the same thing will work within the auto industry. So if you have different companies, if you have different people doing things differently, if you step back and let it be free, then resources will move to where it is most required. And that is the secret behind capital, right? Capital meaning people, meaning land, meaning money, all of these things want to get return, and they will go to where they get the highest amount of return. So if the health industry is doing poorly, I won't invest there, I won't put land there because I'm not getting return, I'm going to lose, I will go to where it is giving me returns. And so free market theorists say that the market always knows best because no one individual can see the big picture, right? Everybody only sees like a part of the picture, and therefore we can't control it. We can't say this is better than the other. And while there may be some inefficiencies because some businesses may collapse if the market is if resources are allocated wrongly, those efficiencies are still less than in a controlled economy, right? And that's the opposite, the free market, which a free market economy, and that is the command economy, right? And in a command economy, one person steps back, or a committee usually, and they see where resources needs to be done and how much waste is happening here or not happening there, and then they allocate those things, right? And that can be efficient to an extent, but after a long run, it's not going to work out because the economy becomes too complex. So in many companies, within a company, it is a kind of command economy, right? The boss looks down at the employers and say that I think you should do this and we should do that, and we will decide to do this, and this is a command economy. It's not that people can do whatever they want and whoever is successful ends up defining the company, right? But that's, I don't get into too much detail, but that's the basic kind of split, okay? So in the free market economy, less intervention or zero intervention, and then the economy will sort itself out. There'll be free competition and people can compete freely. The only intervention that's usually acceptable in a free market is to ensure that monopolies don't happen, right? If a monopoly happens, if one automaker is bigger than everybody else, you don't get competition, and then they control everything. Okay, so in opposing the free market, you can use this to show how even free markets are not absolute. But those who oppose it say that actually a lot of it isn't really free, right? Companies companies and markets protect themselves all the time, right? They have regulations on labor, which is a big one. Every economy has regulations on labor. Who can work where, right? If countries didn't have immigration, then you can say, then prices in the first world will come down a lot, because that's how the first world controls the cost of wages, by not allowing full free competition of labor, right? They have environmental regulation to say what you can or cannot do. That's also a type of regulation. There's regulation to protect land, right? So that's also a type of regulation. You have regulation in extension to like immigration, also on terms of wages, in terms of working hours, in terms of many other different types of regulation that control the types of freedoms. And countries, governments do this because they feel like there is an additional value, more than just competition and more than just efficient use of capitalism. They also recognize that when the focus is only on efficiency, sometimes we lose picture of other things, right? Because honestly, if you just want to be really, really efficient, then you shouldn't have minimum wage and you shouldn't have labor production, right? Because then people can choose whether or not they want to work 20 hours a day, whether or not they want to work for free, or whether they want to accept some kind of temporary slavery in order to get larger benefits. But we don't do that because we think sometimes people miss the big picture, okay? So those who are against free markets say that sometimes we miss the big picture and we need regulation and we need some kind of government intervention. We need some balance, right? So some part of it should be free and compete, but some part of it should be controlled. And the debate is about where you set this line and how much balance you have. Very, very few people will take it absolutely. So say if there was a spectrum, running out of space here, but let's say that's the line, right? So over here is absolutely free, zero protection. Very, very few people will take that. And over here is absolutely controlled, right? Like North Korea, there's no free market whatsoever. Again, very, very few people will do that. Many countries tend towards being more free, at least rhetorically, than being less free, right? So they want to go in this direction and say no control, no subsidies, blah, blah, blah. The debate is about whether you should move this here. In reality, even the countries that are here are actually kind of here or maybe even further. While they argue to remove tariffs overseas, many developed countries protect their labor markets, protect their agricultural markets, and even protect key industries, right? They subsidize them when they are failing, as we saw with, GM and all those companies, okay? So it's about relatively moving, okay? Don't take extreme positions and say we need to go back into the command economy or we need to have a fully free, but it needs to tend on the side of freedom or introduce more balance and a kind of 50-50 control in it, okay? Good. So those are all the debates about the free market. Generally, I promise you it will be pretty much that. And I will show you. This one is the clearest kind of classic free market debate, right? And it's a debate about free trade agreements. And you will get this debate over and over and over again. There was a big issue in Korea with the KORUS free trade agreement, and kind of still is, right? This is the Korea-US free trade agreement. There was still a debate, and sometimes still is, on NAFTA, whether or not it was successful, whether it's not successful, right? Debates around the WTO, debates around AFTA, the ASEAN Free Trade Agreement. So all of these debates are about, on one hand, trying to create freer, more open markets, right? And using diversity. So in these debates, we talk about how specialization and big economies, small economies can work together. One supplies the labor and raw materials, the other one supplies capital and expertise, and everybody becomes happy. And that's, the essence between these kinds of collaborations. On the other side, people say that too much difference will lead to not cooperation, but exploitation. It's not that the US is helping Vietnam develop, they're using Vietnam to develop. They are picking things which they want, and they'll control the intellectual property, and then it becomes really, really difficult for the Vietnam or any other smaller economy to develop and to compete with these big guys, right? And that's pretty much the debate. Do you need the protection? Will that lead to more benefits in the long run? And can those benefits be achieved in some other way? It's not a debate about not having markets, right? We need to have a global market because everyone wants to sell to someone else. But it's about how close and integrated that market should become and whether or not it's equally fair to all the players. The TPPA is a really interesting proposal, right? The Trans-Pacific Partnership Agreement, I think is what it stands for. And it's a trade deal that will bring together the US, Canada, Japan, some of the largest economies in the world, along with Southeast Asia, with Australia, and many other Asian countries, right? Malaysia, Singapore, Philippines, blah, 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 blah. So many countries coming together, tying the Pacific and Asia Pacific and North America to create a very extensive free trade agreement. And it's important because it's the first kind of big one in a long time. Many other trading blocks and trade deals have kind of floundered and failed and nothing really came out of it. So if this happens, it'll be a big boost. It also represents a huge amount of the world's wealth and will create a big bump in terms of the growth and development. And you will see the same kind of debates, right? Will it be fair? Do we know anything? Do we know all the details? Interestingly, these trade deals are very complicated, and countries don't make like a yes or no agreement, right? Like, yes, I will open everything, or no, I give up. Countries discuss what they're willing to open, what they're willing to allow, what they're not willing to allow. And a lot of these discussions happen in secret. You only find out after the countries sign them. Even in the US, right? So Barack Obama has fast-track authority to negotiate these deals, and that means they will make a big agreement, and then Congress will just vote yes or no, and you can't pick different things. This means that things can be negotiated quicker. It also means that in practice, you let the experts discuss, key industry players, right? Like representatives from different sectors, rather than having a big referendum on it. But in what actually happens, or the result is, people get left out, and at the end, people get surprised by some of these things, and that makes it a bit harder for many people to accept them, right? So you'll have a lot of the usual, and those are the usual arguments with any kind of free trade deal. With TPPA, the difference here is also about China. China is not part of this deal, and part of the reason why the US wants to do this is to counterbalance against China. China is explicitly not invited to be part of this deal. So what does it mean for other countries to be part of the deal? Are they standing up against China? Is that a form of protest against China? Will that sour their relationship with China? Or is it just, is it just an efficiency, effectiveness thing? If you're going to have a really effective trade deal, shouldn't you include like the second largest economy in the world that is in that region? How effective is this bloc going to be? And will that make the situation worse in the Asia Pacific region with a more antagonized, combative China, right? So that's the debate about the TPPA. Free trade agreement, but with a slight political twist. Although if you think about it, many of these trade agreements are inherently political. Second thing here. So this is a very kind of classic free market, right? In the free market, you trust the consumer, and you trust the businesses, the buyers and the sellers. You say government steps back, government sets up basic regulation, and then people can do whatever they want to do, right? This debate takes the slightly more protectionist position and says that some consumers can't be trusted to make fully independent decisions because not everybody is fully rational. And rationality here is, your rationality is bounded, right? And this is the argument Chang Ha-jun makes in his book too, and many economists make. Because as an individual, I'm deciding based on what I can see, based on the advertisements, and that's it, right? I can't see the big picture. I don't see everything else. So I trust the company and I trust the government. But the company is doing things for the company's benefit, and the government thinks that they shouldn't interfere because they can trust the consumer. So consumers end up being a little bit screwed, right? And that's why in some things that can be really, really harmful, governments intervene, like medicines. So if a company wants to say this is a drug, it needs approval. They can say it's a vitamin and sell it to you, which can also still be a little bit dangerous. But if they want to promise certain things, they need to get specific approval. And this applies to like things that you eat, things that can harm your health, right? They need to get specific approval before they can put it out there, because you can't trust the consumer to know. The argument is that financial investment products need to go through that same screening because they are really, really powerful. Financial investment products here refer to like saving schemes, investment schemes, things that say if you invest in this, you can get 10% back in the next 3 months, double your money, blah, blah, blah. So this can include Ponzi schemes, right? And these are basically just scams. Ponzi schemes are pyramid schemes, they say, because you get many, many people to just keep giving money to the people on top. People on top get money, and then the people at the bottom lose money. And if the pyramid gets bigger, then the people over here will get more money from the people at the bottom, but eventually the pyramid will crumble, right? So it isn't really an investment scheme, it's just a kind of scam. So financial investment products include these kinds of schemes, Ponzi schemes, but they also include just things that banks are selling, because sometimes banks really don't know the long-term consequences of these investment products, as we saw with the financial crisis, right? Even really, really clever economists were fooled. Banks who invested in other banks lost money. There are a couple of examples of like business schools who invested in some of these products and lost money, right? So people don't really know what's happening. They're just making up all these things and selling them very, very quickly. And so you draw a big correlation to medicines, and you argue that they can destroy a person's life, your investments can go, you can lose your house, blah, blah, blah. So we need to slow it down. Governments should evaluate, right? On the other side, you say it's not like medicines. It's not something that's going to harm you. It doesn't affect everybody. Only people who choose to do this can do this. And governments can educate and warn, but they shouldn't regulate it because it's not like medicines. The harm is not the same. But also, it's going to slow down the growth and the economy. People have learned from this kind of mistakes, and that's the free market in action. And if you have too much regulation, like if you have to wait 2 or 3 months before the financial product can come to market, maybe the product won't be efficient anymore. It won't be effective. It's not going to apply. You're not going to get the kind of growth that you're getting. Because as much as we complain about the crash now and losing jobs, the financial markets and industries was really spurring growth before by creating all these financial hubs across the world. So you need to have some kind of regulation, yes, but this is too much regulation. Have transparency, more information. We don't have to do this because it is not medicine. Right? Classic kind of free market clash. As for the third one, you guessed it, we're going to look at it in detail. Excellent. Let me have a sip of water. Well, coffee. So, this house believes that state-owned enterprises bring more harm than good. First thing we have to decide, or not decide, be aware of in today's debate is that this is a comparative, okay, on more harm than good. So you have to talk about how this impacts the economy or the country, set the standards. What do you mean by more harm and more good to measure, so that you can measure against the other side and the alternative. And then, otherwise the debate is going to become really, really messy, okay? Now, I think there's a lot of correlation between this debate and the protecting infant strategic industries debate, okay? Because it's about government involvement in the market. I don't trust the market to be free and do whatever it wants. Government wants to have a role, and government wants to protect it. Except in the infant industries, there is an infant. So once the infant grows up, the government should step back, right? In state controlled or state-owned enterprises, the state can own it forever. It is a way the state can invest in the corporate sector or to have a continued role in the market or in the economy, right? This shouldn't be expect, this should be accept. Terrible person who made this typo. Last thing in the setup is what is a state-owned enterprise. So state-owned enterprises are very common in China, where everything used to be run by the government, and now they're slowly selling them. And in fact, that's how it worked in many economies. In Korea, right? In America, first the government sets up something, builds it, and then later sells it, and then it becomes private. But some economies, especially economies where there's a lot of state resources, right? Like they have oil or something, they create a company with those resources and let that company run stuff, right? In order to build things. So the majority of the profits made by that company will either go to the state or go back into the company and keep doing things in the economy, but also with an eye on the state, right? So the state, by owning it, will have a direct control over it. So they will own most of the shares of that company or all of it. The company is not listed. They would usually have some government appointed person sitting on the board of that company, right? But other than that, the company will also make a lot of independent decisions. It's not part of the government directly. The company can still, invest where it likes. The company can buy some other stuff. But once in a while, they will need to do something that the government wants them to do. Norway has a very large state-owned enterprise to invest all its oil money. Singapore has Temasek Holdings, which is a very successful state-owned company. Malaysia has one too. Saudi Arabia, Qatar, some of these oil Gulf nations have many state-owned enterprises, right? So the debate is about, is that a good way for the state to manage the economy, to have a positive impact on the economy? The context is and will be economies that, or states that do have money in order to set up these things, right? So the other question will be where else they should spend that money on, okay? So, state-owned enterprises. I like this stance for development. You require comprehensive solutions. You may have seen this stance before, but it still applies, right? So it's a debate about balance. The three arguments that I think you can, should, maybe, must run in this debate. The first one is that SOEs are better than the state itself just spending money. And this is what I was saying earlier about the context. These are states that have lots of money, right? Singapore has a current account surplus. What should they do with their money? Should they spend it on other stuff, or should they invest in a state-owned enterprise, right? Same with Norway, Saudi Arabia, etc. Secondly, it will kickstart new industry. So this is a little bit like the infant industry, debate, but slightly different. And finally, this is a long-term idea that you can keep investment in line with state priorities, and this is good, rather than just letting the market do what the market wants, because sometimes the market doesn't do what is good for the people. So you see here, I've put these things: principle, growth, and long-term. So these things are the standards that I'm setting to compare the more harm and good, right? So it's harm to the principle of effective management, it's harm to growth of the economy, and it's harm to growth in the long term for the country. And those are the three things I'm going to try to stress when I say it does more harm, so that I can use that as a comparison. And if I pick standards that are relatively fair and open, they will encourage the other team to use my standards, right? Unless if I pick very narrow, unfair standards, then the other team will set their own standards, and then the debate will become very messy, okay? So let's go through them one by one, see what they are. First one, SOEs are better than the state itself managing money. So if the state has a lot of money, what should it do? Okay, so I think it's better, or I'm going to argue that it's better, because firstly, it's a business venture. They are building businesses and companies, and that's what these state-owned enterprises do. It can be just like a bank, or it can be an investment company, right? Companies like Temasek in Singapore or Khazanah in Malaysia, the state-owned enterprises, own many other small companies. They buy up local firms that are doing well, or they inject capital into them. They help invest in new types of industries or economies, and that is a positive way to use the state's money, okay? It's not government military expenditure. So it's not really just making the state itself stronger, right? And it's better because it will be run like a company. And this is the interesting part. So it's not a free company that can do whatever it wants, but it's not government either. It sits kind of in between. It's transparent, it has a director, the director can change, They will publish their losses and their profits, all of those different things, right? They get paid like corporate amounts and salaries, and that's good because it attracts good, clever, talented people who want to work in the corporate sector and can work for these industries, these companies. And because it's also a company, if the government changes, the company doesn't have to change. And in many of the economies that I was talking about earlier, like in Norway or in Singapore, the government doesn't change to Singapore. Let's say, Norway, this doesn't do in Malaysia. But in theory, right, so Norway and other places, the government can change. You get a new prime minister, new party in power, the state-owned enterprise can still function. So the state-owned enterprise can function with a longer-term view than just politics, because they're about running efficient business. Yes, the politicians can kind of influence their direction a little bit and keep them in line with government policies, and there can be some positive synergy there, right? But there's also an independence. So you talk about these things as a benefit of how the state-owned enterprises function. Compare that to what if the state enriched itself, and show why it's better to instead set up an SOE. Okay? Secondly, talk about new industries. This is a crucial role that these SOEs play, because it's hard for industries to start without funding. You need to get the capital from somewhere, right? So you either get the capital from international, or you get the capital from domestic. And if you already have the capital, then why don't you invest in your industries? It's hard for the government to just pick many industries. So I set up one SOE, like an investment fund, or I set up a state-owned bank, right, that is supposed to give out more loans to new companies. That helps the industry, helps new economies. It's better for me to develop them locally, because if they don't, they may end up leaving. If the capital is international, when bad things happen, international capital can leave, right? So that's why it's important, and how state-owned enterprises can impact growth in the country by investing locally. Thirdly, talk about the long term, that it's better for long-term development if the state-owned enterprise can support the priorities of the government. So the government says, or the government's priority in the long term is to develop a knowledge industry, for example, or financial sector, or auto industry, or universities, etc., etc. The state-owned enterprise can be encouraged in that direction to support those priorities, right? Because they were set up by the government, they're more in line with what the government wants to do, they have an obligation to do it, they have a responsibility to do it. Not the market. The market can do whatever it wants, and the market can follow the SOE's lead if things work out. If it doesn't work out, market does whatever it wants, right? So, in the long term, this helps the government function better, helps the development of the nation better. It's also really important in times of crisis. And state-owned enterprises often end up being the ones to step in and rescue companies when they fail, help bail out people, bail out companies, or employ individuals in large sectors who can't be and can't be employed, right? So that's kind of social role. And it's okay for the state-owned enterprise to make a loss trying to do those things, because it's funded by tax-based money. So they have an obligation to help people. Not the same with private enterprise, right? So those are some big benefits that you can outline in support of state-owned enterprises. You're not saying we don't want private enterprise. We want lots of private enterprise, but we need these guys here to balance things a little bit, to represent the government view. And in fact, that will give the private enterprises more freedom. Now they can go and do whatever they want to do, because if there's things that the state needs done, the SOEs will do it. At the same time, the SOEs will also do things that the market needs done, because the SOEs also want to make a profit, right? So they're not going to waste money. Excellent. Now what do you say on the other side? This. So the other side, first take a line, right? I will say that the government can support industries, economies, companies, but not own them. Okay, and how I make the distinction is, well, this is one example. They can build things that everybody can use, like infrastructure, right? They can give loans. They can provide short-term subsidies. Now, it depends how close you want to take this line. If you take the supporting infant industries kind of position, that's very, very close, right? So I wouldn't say do that, maybe, okay, because then you are you're basically agreeing to a lot of the arguments, unless you strategically want to do that. But take a much broader role. Governments who have lots of money can invest in education. You can make education free, right? And that really supports industry. You can build roads, ports, airports. You can do all of these things that will make it really viable. You can reduce taxes, which will attract investment, right? So there's many, many things a government can do without owning a company, without even starting a company. And many of these things will encourage the economy to grow, right? So this whole, we need to do this, is a bit of a false dichotomy, okay? So I'm okay with doing all of these things, but I still need to keep the free market free. I got to keep it free, right? So make it easier for them to grow, but keep it free. So make capital really accessible, reduce taxation, reduce barriers, develop human, talent and resource. Don't pick companies. Why? It should be free from politics. I think the strongest angle you can run in the case against SOEs is that it is political, right? If you can show that the money can be used to strengthen the economy in some other way, and if maybe you're okay with one-time saving people from crisis stuff, okay, so you can take out that argument. But other than that, we don't need this. Then the harms will be that these state-owned enterprises are just going to be political. And let me show you. So here also I've used these three kind of indicators: principal, growth, and in the long term, right? So that the clash is really even. And I start straight off the bat with the whole political thing, right? I say it is about politics. If the government is picking the CEO and the board of directors, if their success and their investments are based on supporting government projects, or they're funded by the government, they can't say no to the government, right? And very often you will see these state-owned enterprises doing things that the governments want them to do, like sponsoring, golf tournaments, like organizing Winter Olympics in the summertime, like doing all of these other crazy things because the government wants them to do. And this means that the government's money ends up being misspent anyway. The government might as well have spent the money on its own stuff. Instead, this time the government is doing some kind of, roundabout magic trick thing. Government says, I'm not spending the state's money on myself, I'm giving it to this company. But this company is now investing in me or doing things that I want. So that's problematic. That leads to the government being much, much stronger, build this whole thing about focusing on how it not just leads to corruption, but also strengthens the political position of that specific government, okay? Secondly, this will lead to inefficiencies. It will harm growth. It lead to corruption, it lead to waste, because you're doing all these ridiculous things that the government wants you to do, not things that are really, really good for the market. Because if it's good for the market, give it to the market, right? If what you want to do is to set up a new industry, then set up that industry. Lower tax, remove taxes for that industry to attract investment, offer cheap loans, build some factories and houses, right? Then the industry will start. You don't need to set up a state-owned enterprise to do it. The only reason you do that is to hide some corruption and waste. Shouldn't do that. Lastly, in the you run this long-term argument that it will kill private industry because the state-owned enterprises become a priority. You cannot let the state-owned enterprises fail, right? So if there's a competitor to an industry in which the SOE is functioning, guess what happens to that competitor? That competitor will lose. And people won't want to come in to compete against the state-owned enterprise. And yeah, you can say maybe the state-owned enterprise can kickstart things and give it up. But then if it's giving up, the state-owned enterprise isn't making money from that thing. So they will try to sell it anyway, right, to the people. So it isn't really developing the market. If I'm going to be an entrepreneur, I'm not going to compete against the SOE. I'll just end up working for the SOE. And you think that's a problem. So rather than the good talent going to different companies that will compete with the SOE ends up sucking all the talent from those companies and then supports the government position and makes the country broken, right? Leads to the loss of growth, etc., etc. So that's the position, that's the opposition to SOE. You take an open market approach You inherently distrust government, basically. You think governments and these political parties are all just about supporting their own power, right? Selfish guys. And it makes sense if people on the government team are accusing private corporations of being selfish and politically motivated or personally motivated, then the same applies to politicians and parties. And when they are selfish and personally/politically motivated, they just want to support themselves. So I don't want to give them more power. I want to have a free market. Maybe they can invest in the whole economy, but they shouldn't build these little SOEs. Or our SOEs different because the SOEs are transparent and the SOEs are independent of the politicians and the party. And if SOEs fail, then politicians also end up suffering. Maybe, maybe not. Maybe not. But that, my friends, in a nutshell, is an overview of debates about the free market, right? Support the free market principles, but remember that there are limits. Don't take extreme positions. The debate is about the difference in the margins. Excellent. Have fun. Enjoy debating about free markets.